Hey everyone. The home improvement industry in the United States is one of the bigger industries in business, approaching $1 trillion annually in spending. Home Depot and Lowe's are the two biggest players in the home improvement industry. So in this video, I'm going to compare the two and answer which one I think is the better home improvement stock to buy today. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Starting with the comparison in revenue. Over the last 10 years, Home Depot and Lowe's have done a great job in growing their revenue. In fact, for brick and mortar businesses, they've been one of the outperformers in this industry. That's because home improvement is a difficult industry to disrupt digitally. You can't really sell the type of things that Home Depot and Lowe's sells online all that effectively, because the things are so big and bulky and heavy that to ship these products would be prohibitively expensive. Now, Home Depot and Lowe's do have their websites and they're doing relatively well, but still many people visit Home Depot and Lowe's stores to buy the items because they're more available in person and they typically cost less when you buy in person. Delivery for these items, you can get delivery for, for instance, if you're buying drywall, you can get drywall delivered to your house, but you have to pay a premium to Home Depot. They don't offer you free delivery in most cases. So for those reasons, they've been able to protect their business from encroachment from the likes of Amazon. And that's led to high single-digit revenue growth for both Home Depot and Lowe's in the last decade. Now, an interesting thing happened to both Lowe's and Home Depot during the pandemic, and that was they experienced a surge in sales. That was unexpected. Nobody thought that after the onset of the pandemic, spending on home improvement would surge, but that's what happened. Home Depot and Lowe's benefited from that trend. Lowe's a little bit more initially, and then Home Depot benefited on the back half. Let me explain why. Home Depot generates a greater percentage of its sales from professionals than Lowe's. So Lowe's is more consumer-oriented. Home Depot is more professional-oriented. So in the initial stages of the pandemic, when fear was at its highest, people didn't want to let other people into their homes, construction workers, professionals, etc. And so those projects that required professionals were put on hold initially. It was more so small home improvement items that people can do themselves, like painting, maybe a little upgrade here and there. But then, as fear started to decrease, as people got vaccinated and people started to, get COVID, once and twice, and, after getting it twice, they felt a little more comfortable. They weren't as fearful of attracting the disease. And then spending on projects that required professionals, that surged afterwards. So after the initial surge for smaller projects, those bigger projects surged in the back half. All right, so now as economies reopened, Home Depot and Lowe's are experiencing a decrease in sales, as you're noticing here, the pullback. So they both generated a huge benefit, and now they're experiencing a little bit of a decrease as a result of the rapidly changing consumer dynamics. Longer term, though, they're both in an excellent position. Number one, because of those competitive advantages I highlighted against online retailers like Amazon. And then number two, both Home Depot and Lowe's management have been saying for several years now, the number one determinant that causes people to spend money on their homes, on home improvement, is the value of their homes. When people see the value of their homes increasing, it makes them more excited about spending on home improvement projects because they see it as an investment, not as an expense. So they see it as, I can spend $5,000 on this upgrade, but it's going to lead to a $10,000 increase in the value of my home. And so they feel more interested in that project. Whereas when home values are falling, they like to delay and pause and not want to spend more money on their homes. They feel like it's a waste because the value of the home is dropping. And what have we noticed with home prices in recent years? They have absolutely exploded. I've been saying for more than a couple of years now that homes are one of the most expensive assets today. They are one of the most overvalued assets today. Homes are selling for, in Los Angeles, around the areas I live, homes are selling for over $1 million. And these are 3-bedroom fixer-uppers with very small yards. Home values have absolutely exploded as a percentage of income. In any metric you want to evaluate, home values are overpriced. Now, that's good news for Home Depot and Lowe's, because that means people are more excited in spending money on their homes to upgrade, to fix it up. It also means that people will have a hard time downsizing or upsizing because of the current situation with mortgage interest rates. Mortgage interest rates have exploded in the last 5 years. So if someone is to change their home, sell their existing home, and either upsize or downsize, there could be a disruption in that lower mortgage rate they've locked in, all of which is working in Home Depot and Lowe's favor. The next thing I wanted to compare these two is on operating profit margin. Home Depot has consistently outperformed Lowe's in the operating profit margin category, and that's sustained for over a decade. Home Depot is consistently the better performer in this category. Home Depot operates the business better, it knows its customers better, and those improvements led Home Depot to generate better profitability. Interestingly, Home Depot has a more customer-friendly business model. One of the things that Home Depot does is it's quick to lower prices, but it's slow to increase prices. And that was apparent during the huge price fluctuations during and coming out of the pandemic. One area, lumber prices, would explode and then decrease, right? We saw lumber prices soar from $400 per 1,000 square board feet up to $1,500, and then back down to $500, and then back up. So wildly fluctuating prices is disruptive to a lot of businesses, a lot of professionals. So Home Depot, when prices fall for the commodity, they're quick to lower price at the stores. But when prices increase for the commodity, they're slower to raise prices in the stores. So that's more customer friendly, and you would think that would hurt its profit margin, but it really didn't. It really didn't hurt the profit margin vis-a-vis Lowe's, because they retained the business that they otherwise may have lost, and the scale allowed them to continue generating healthy profit margins. Lowe's has been making some improvements as well. You can see both their profit margins are higher than they were a decade ago, both for Lowe's and Home Depot, as the two have gotten better at operating the business. Another metric critically important is the return on invested capital. How good are these companies at using investor money to generate a profit? And for the last decade, again, Home Depot has beaten Lowe's in this metric, although in the recent 12-month period, they've come very close. But for the better part of the last decade, Home Depot has outperformed Lowe's, and I suspect that will be the case for the next decade as well, even though in the near term, they may be close as they are here. And finally, I wanted to compare them on the valuation. Home Depot is trading at a forward price to earnings of 20, while Lowe's is trading at a forward price to earnings of 15.87. If they were selling at the same price, this would be an easy decision. It would be Home Depot, no-brainer. But since the valuation is so different, Home Depot is nearly 20% more expensive than Lowe's, or 25% more expensive than Lowe's. It makes the decision a little bit harder. Still, I think Home Depot has earned this premium valuation over Lowe's. And if I had to pick between one of these two home improvement stocks, I would pick Home Depot. Even though I like both of these home improvement stocks, I have both of them rated as buys, I would prefer Home Depot over Lowe's because of the better performance in the critical financial metrics. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.